Welcome back to Ostrich Investing. Today we're going to talk about Wajax and give an update on their Q1 results. Let's jump into it. So long-term Ostrich viewers will remember we talked about the mighty Wajax back at the depths of COVID crash. I believe it was April of 2020. Things weren't going so well. The company just announced favorable Q1 results. So first quarter 2020 this week, and the stock jumped another 15% on the news. So adjusted earnings per share up 103% year over year to 59 cents. So pretty impressive. We'll talk about it. This is really just meant to be a quick update video, and we'll talk about key considerations for investors and really whether the shares still present a good opportunity. If you want more on the business overview, it's a heavy equipment dealer that also does industrial parts and repair services across Canada. See the video from last year. Again, I'll try and put a link in the description below. So highlights, what we're going to talk about in this video, the Tundra acquisition that they just made in January was a pretty large acquisition for them. We'll talk about their working capital levels, free cash flow leverage profile, and an update on their backlog and outlook. So disclosure, I own Wajax, I'm long the stock. It is though a small cap and higher risk position. That being said, disclaimer, none of this is financial advice, just for your entertainment. Do your own work. And you can see the work that I'm hoping Wajax is doing on maybe their next set of heavy equipment on the right-hand side. Something a little bit more like Optimus Prime and Transformers would be fun to see. Let's jump in. All right. So on the share price side, you can really see that ultimately, Wajax has recovered from its pre-COVID, recovered to and beyond its pre-COVID levels, in December 2020, that's when it announced the Tundra acquisition. And again, $100 million is a pretty significant acquisition for Wajax, so we'll talk about that a little bit. The second point here, and what prompted this update video, they just this week released their Q1 earnings, and the stock sort of popped from that $20 level to call it the $23 level. So it popped about 15% on the news. So again, Wajax share price is back from the COVID lows. It still pays $1 per share dividend, which works out to be about 4.3% yield, and currently trading at an 11.5 times price to earnings ratio based on its LTM earnings. And what I like to do here is just add in the "we don't talk anymore" graphic from Selena and Charlie. And what I've done here is essentially just erased that time period from early 2020 where the share price cratered. We've just sort of blocked that out, and we don't talk about it anymore. All right, let's talk about Tundra. We will talk about that. And this is a busy slide. Who made this one? There's two really key points here that I want to get across. The first is the Tundra acquisition is really moving the needle on the revenue profile for Wajax. And they highlighted this in their December presentation when they talked about the acquisition. So Tundra is largely Western Canada based, and it's 100% revenue related to industrial parts and repair services, ERS. So what that means is it's going to continue to provide diversification for Wajax, a little bit away from the heavy equipment side, which can be a little bit more cyclical and very working capital intense. So you can see the pro forma revenue mix goes from 34% IP ERS to 41% of revenue coming from IP ERS. And again, the thinking there is it's a little bit more stable, it's a little bit more recurring in nature, and it takes less working capital to run. So all in all, I like the strategy. And you can see on the bottom part of the slide that they've done a few acquisitions in this segment too. So Delome, North Point, which I think we talked about in the previous video, and then Tundra, and Tundra being the largest that they've done so far. So they paid 6 times EBITDA for this acquisition, $99 million, and continue to build out that segment of their business. So I think that's important. I like it. I mean, obviously need to execute, but on the surface, I like it. Okay. Q1 results, and this is in their investor presentation from their Q1 results reporting. Lots going on here, but I like the disclosure. I like what they've done. The green is good, arrows up are good, red is bad, arrows down are bad. And then off on the year-to-date side, you can see E, W, and C. They sort of give you some geographic perspective on whether Eastern Canada, Western Canada, and Central, how business is going. But there's really two key takeaways here. The first is growth in heavy equipment, particularly construction and forestry. have seen some pretty good growth, up 43 million year over year between Q1 2021 and Q1 2020. So for a business that has had a tough few years, if you look at the type of equipment that they sell to end markets in mining, oil and gas, construction, forestry, it had a lot of headwinds the last few years. So it's nice to see positive growth. Anyone who's looked at the cost of lumber recently will realize that there's a really strong market. And so it's nice to see that growth start to translate into results at Wajax. And then the second point is industrial parts and services. And again, probably shouldn't surprise us. We just talked about all the acquisitions they've been making there. They got 2 months of contribution from Tundra. And so there's some revenue growth there. A lot of that would be acquisition growth versus organic. But in total, revenue up 12.5% for the quarter compared to the same quarter in the previous year. So pretty good. Backlog, I've used the pointing up emoji. So backlog is up, which again is really nice to see. For Wajax over the last few years, it was more of a case of shrinking backlog and shrinking revenue. So it's nice to see that start to pop back the right way. And you can see the chart here on the bottom right of your screen, where between Q4 and Q1, there's a pretty sharp increase in backlog. And some of that relates to the backlog they inherited from Tundra. But you can see here, the blue piece, which just talks about the heavy equipment side, that's a pretty material increase in backlog. And even if you strip out Tundra, management talked on the call, there's still pretty impressive just increase in organic backlog. So really good to see. So the backlog's up, which is good. And then the inventory is down, which is really good. That's a nice 1-2 punch. So we got the going down pointing emoji. And you could see over the last, call it 4 quarters here, inventory has continued to trend down. I give management credit here, induced by COVID, obviously a tough year for everyone. Management's done a really good job at bringing in the inventory levels, which I think was a real concern for investors going back a couple years. And they've done a good job at bringing that level in. And clearly they're going to need to manage it going forward, but good results so far. And that's nice to see. So what does that all mean from a cash flow and a leverage perspective? Really positive for Wajax, and it's strange to think about, just coming out of a COVID year with pretty significant disruptions. But because of the move in inventory and being able to bring those levels lower, look at the cash flow provided from operating activities: 43 million in Q2, 35 million in Q3, 48 million in Q4, and a whopping 77 million in Q1. Add all those numbers up. That's a pretty large amount of cash flow, particularly when you compare it to its current market cap today of 500 million. Now, we know it's not sustainable. You can't bring working capital and inventory levels down, forever. But again, really nice to see. And I think the big thing for investors is what that's done to de-risk on the leverage side. So if you go back on the bottom side of part of the slide, if you look at Q1 from 2020, leverage was pretty high at Wajax, a little over 3 turns total, in a pretty low margin business, not really in management's comfort zone either. I think they've done a really good job at bringing leverage in. And you can see here, currently leverage is at basically 2 times debt to EBITDA, because of the debt repayment they were able to do over the last year with the free cash flow. But also, I think what really makes this point stand out is leverage is at 2 times, and that's even with 73 million draw of additional debt to fund Tundra. So pretty incredible how quickly that's changed. Again, so they get the applause emoji. We have to manage it going forward, of course, but night and day, the leverage profile of the business in terms of where it was just a little over a year ago. Okay, so let's wrap it up here. Wajax, the share price has clearly recovered from the COVID lows, and I think now the story shifts to potential future growth. So we're starting to see, flow through from higher commodity prices in, mining, forestry, see that translate into increasing demand for Wajax products. Management, I listened to the Q1 call. Management struck a conservative tone on the Q1 call. It's early, but there are lots of positives in the numbers. Growing backlog, reduced working capital, free cash flow, and deleveraging. This is a small cap stock and definitely higher risk, but I do think the strength in end markets could, and I've put that in bold, provide a catalyst for stronger financial results and share price going forward. Again, it's early days, but it was a nice quarter to see. What are the risks to the story? Again, Wajax is a low margin business. There's not much room for error. Supply chain, they talked about that on the call as well. Even if customers want certain products, there are supply chain issues globally right now, and you can't necessarily get everything that you'd like. So Wajax needs to manage that with their suppliers. And then lastly, ERP. Wajax is about to implement a new ERP system over the next 24 months. And if that all goes smoothly, that should be great. But ERP systems have the potential to be disruptive. So hopefully that goes well. So that's it for today's video. Love to hear your thoughts in the comments below. Are the strengthening end markets going to be positive for companies like Wajax, maybe Tormont, Finning? And that's it for today's video. We'll be back with more. But until then, happy investing and don't bury your head in the sand.